Hey everybody, welcome to Talking Real Estate at Champions Real Estate Team at Berkshire Hathaway Home Services and Basswood Real Estate Company. My name is Mark Wehner II, team leader at Champions Real Estate Team. Also joining me today is Russ Williams with Williams Mortgage. Every Wednesday we jump on over the lunch hour and try to give you a rundown of what's going on in the market over the last week to keep you up and informed. We'll also talk about the mortgage industry and kind of what's going on today with the Feds possibly increasing the short-term rates. So we'll go over that. So first thing we'll jump into real quick is what the numbers are doing. So active listings over the last 7 days is basically 335. New contracts written is 382. And then we had 391 new homeowners this last week. So congratulations to them. So numbers are kind of still the same, what we've seen the last couple of weeks. We have less listings than we have new contracts written. So basically as we, same song and dance, basically one in, one out. You got to be very competitive. You got to have an agent, one of the agents here at Champions Real Estate Team that basically can hopefully find you some of those off-market deals. I just went to the dentist on Monday, and it was funny enough, sitting in the dentist chair, the dental hygienist, as well as the dentist. Both were talking to me about real estate. One's moving out of state, going in that aspect of it. One in Omaha is selling their house. Home is not on the market yet. And so it's just kind of talking to everybody, it just comes up with real estate. It's one of those hot button items, the topics of what's going on and how the market is, so you got to have an agent out there that's walking, talking, and eating, sleeping, everything real estate of what's going on out there to help your clients and help our clients find you that home, that needle in the haystack aspect of it. So, but that's kind of the aspect of that big picture that we usually go over here. So numbers are down as far as the number of active listings in the Omaha Lincoln MLS. So that's Omaha and Lincoln combined and the surrounding areas out there. We have 1,136 homes for your viewing pleasure. I did take out the no-show listings. The Douglas Sarpy County, breaking it down a little bit narrower area, just kind of our region here. So we have 500 and just about 552 new or active listings. Existing homes in the Douglas Sarpy County are 187 listings and 365 new construction. So as you can see, it's like myself going into the dentist chair and talking about, well, what do you do for a living? I do real estate. Oh, great. And it just comes up and you talk, and next thing you know, might have found a potential house for my client sitting in the dentist chair, as much fun as that is, right? So, but they did a great job over there. So, but months of inventory down a little bit, as you'd expect. Obviously, houses are kind of flying off the shelves. We're seeing more buyers come into the marketplace. Obviously, more sellers are coming into the marketplace. But the average sale price is going up. And we'll kind of jump straight into it with Russ here on kind of what the mortgage thing is. I know numbers aren't changing too much as far as the housing inventory, but the Feds are meeting this afternoon. And I believe they're making the announcement for what they're deciding to do with the interest rates, what they're doing with mortgage-backed securities. So all that kind of plays in. I was just telling Russ, I was watching the WWT Channel 6, lunch newscast, and they had the national segment on that they kind of fill in about, the short-term rates, the rates are going up, and one of their highlighted bubbles was mortgage rates and housing interest rates are going up with this announcement today with these short-term rates, so I guess, Russ, is that true? I mean, yes and no. I guess what are your thoughts? And from your expertise, I guess I kind of know the answer, but I think some of our guests may not. And you get the media out there kind of getting a frenzy on what's going on. So I guess we just want to make sure you guys have valuable information so you can make an educated decision whether now is buying a home is great, refinancing, anything to that sort. So what can you tell us, Ross?
Yeah, it's important to know that the Federal Reserve, when they make their rate hike announcement this afternoon, they are affecting short-term rates. They will refer to what's called the Fed funds rate, which is what directly impacts the prime rate. And the prime rate is what affects things like credit cards, student loans, auto loans, even home equity loans and home equity lines of credit. They do not directly impact mortgage rates. Generally, if nothing more were to happen, then the short-term rate be increased today. We could see mortgage rates improve a little bit this afternoon into the latter part of the week. However, more important in the mortgage world, more important than what the Fed does to interest rates, is what their language will be with regards to their balance sheet. Meaning, right now, the Federal Reserve has a tremendously large balance sheet of Treasury debt and mortgage bond debt. They have expressed the desire to start to reduce their balance sheet, which means they'll be selling those debts off, those bonds off. If they are going to start selling those bonds off in the short term, that will move mortgage rates higher. If they are not going to be selling those debt instruments, those securities off in the short term, and they increase their short-term rates, we could see a little bit of an improvement in rates today. So they've got they're balancing on the blade of a knife, Mark. They've got inflation that's running at 40-year highs. They've got, of course, the war. They've got COVID, supply chain shutdowns. We're going to be listening very closely to what they have to say, and what they say today is going to be more important than what they do today.
Yeah. I mean, it is. We don't know. Like you said, like anyone asks us, what are rates going to do in the future? We don't know what's going to happen. But it is important to know the instruments that are involved, and what are the players, and what are the plays that they can run that would affect the mortgage industry and kind of our business and the real estate side of it, and how that all culminates with everything else out there. So like you said, the mortgage-backed securities, it's very simple that if they sell those off, to the private investors, for all intents and purposes, those investors want a better return on their money. So, and hence the interest rates go up. If the government hangs on to them, they're holding them, and so those interest rates can stay down. So I think that's kind of the simplified version of how I kind of understand it in that regard. So I think that's just something to be very knowledgeable about, that you're going to hear, on the news today or tonight, when you get home, or if you're listening on the radio or whatever's going on, and you're thinking of buying or selling a house, don't panic. If you have questions, give us a call. We'll put you in contact with Russ or someone that, knows a little bit more in tune with that, so that you can have that information and talk about over dinner. Should we pull the trigger on buying a house now, or should we, those type of things that, like we said, every week we talk about coaching and educating you, and that's our goal moving forward in this process. So another thing we were kind of talking about that we've been going to touch on the last couple of weeks is kind of the bridge loans. I think we've been meaning to jump into that. So I guess, Russ, if you have a little, when we're looking to buy a house and we have a house to sell, if you're trying to buy that house, that contingency may, not be as advantageous. Oh, looks like we lost Russ. Lost his video. So
there we are. Yeah, who knows? Okay. Maybe Vladimir Putin attacked our connection.
Sorry, I don't want us talking about the mortgage industry. So, but yeah, what I was just talking about, I don't know if you could hear me, but we were just kind of, I was just talking to the audience just about, the bridge loans and advantages of being able to use that and not have to sell your house right away, so you don't have that contingency on there. So,
yeah, there's a lot of misunderstanding on what a bridge loan is. A bridge loan, simply put, is moving the equity from the old home to use as down payment on the new home. The nice thing about a bridge loan is, just as Mark mentioned, it allows you to buy the new home without the contingency for the sale of the old home. And in a market like this, where the sellers have lots of offers to choose from, they're going to choose the lowest risk one. And if there's a contingency out there, that's perceived to be a higher risk. And so having a bridge loan to move the equity from the old home to the new home is a great way to secure the new property before you've secured a sale of the old property. It's not everybody can qualify for them, and generally speaking, you can generally on a bridge loan get equity out up to 90% of what the home would be worth. So, for example, if you had a home worth $100,000 on which you owed a $60,000 mortgage, you could have liens using a bridge loan up to $90,000. So if I were to subtract the $60,000 existing lien from the $90,000 total available, I could have a bridge loan of $30,000 that I could use as down payment on the new property. So bridge loans are underused. Not all institutions do offer them, but they can be a great way, just as Mark had mentioned, to secure the new property before you've entered into agreement to sell the old one and be able to buy non-contingent, which is very important in a seller's market.
Yeah, absolutely. And I mean, it's like you said, it's what tools do you have in your toolbox? And that's stuff that some people think, well, I don't want to jump in the market, I have to sell my house, and maybe that's holding them back, or I don't know, where I'm going to go, so, but it is, have that option out there. I don't want to be homeless. We hear that a lot. That I think that's kind of one of the catch-22s of our market that's been there for the last couple of years is, I don't want to sell my house because I listen to your videos every week, and you're telling me there's no houses out there. Well, you can write a contingent, upon finding a house within a certain amount of time. If you're using that bridge loan, then you don't have to sell that house to buy that house, in that aspect of it. So those are some things that, like, what are the tools that you have available to you, and just get that education. Give us a holler here at Champions Real Estate Team. We're willing to walk you through that, whether you're buying a house in the next 3 weeks or the next 3 months or the next 3 years. It's just kind of get that information out to you. So, but do you have anything else you wanted to add on that at all? We try to simplify it, and if you want more details, give Russ a holler, 402-290-8936 in that regards. But I don't want to keep it short and sweet today. But so you'll hear a lot of chatter, I guess, if you want to call it, on that, on the feds, what they're doing. So if you listen to radio or watching the news tonight, or even online, or all that kind of fun stuff, just take it with a grain of salt. And if you have questions on what's going on, reach out to us. We're happy to walk you through what's going on to the best of our knowledge. And ultimately, we can't predict the future, but we talked on before, if interest rates are going up, I want to wait until they come back down. Well, if you're waiting, right now the purchase prices are up 14% from this time last year. I don't see anything with just simple supply and demand aspect of it that the purchase prices are going to be going down anytime soon. So it's almost like, get into it. Even if your interest rate's higher, if interest rates go down in the next couple of years, refinance. If you plan on being there for a decent amount of time, and we can teach you how to do the numbers to see when you break even on a refinance. So, or you keep that house as an investment property, cash out refinance, pull out 75% of your equity, put it down on the next one, keep your current house, as an investment property. So especially to hedge some of those inflation concerns, keep that asset that's, hopefully going to be appreciating over time while you're getting a little cash flow on the side too. So, but as always, appreciate everyone jumping on, listening to us. If you have questions, comments, hit us up on any of the platforms that we're on: LinkedIn, Facebook, YouTube. Like, share, all that kind of fun stuff that everyone always chats on their videos. But most importantly, if we can help you, give us a holler, message us, 402-672-7670, or Russ at 290-8936. And we will chat with you guys again next week. And have a great, safe, and happy St. Patrick's Day tomorrow. So be safe out there, and catch you later. Don't forget to wear green.